Welcome to our channel. In today's video, we're diving into an exciting topic that could change your financial future forever. We'll be exploring 8 powerful assets that can help you build wealth and potentially allow you to never work again. Imagine waking up each day without the stress of a 9-to-5 job, all thanks to smart investments and strategic asset management. Throughout this video, we'll break down each asset, explaining how they work and why they're essential for achieving financial freedom. From real estate to stocks, and even digital assets, we'll cover a range of opportunities that can set you on the path to wealth. But this isn't just about making money, it's about creating a lifestyle where you can enjoy your passions and spend time with loved ones without the burden of financial worries. So, if you're ready to take control of your financial destiny and discover how to leverage these assets for a life of abundance, stick around. You won't want to miss the insights we have in store for you. Let's get started on this journey to financial independence. Real estate investments. Investing in real estate is one of the most effective ways to create passive income and build long-term wealth. One of the primary benefits of owning rental properties is the consistent cash flow they generate. Each month, tenants pay rent, providing you with a reliable income stream that can cover your mortgage and other expenses while still leaving you with profit. Additionally, real estate tends to appreciate over time, meaning your property's value can increase significantly, contributing to your overall net worth. There are various types of real estate investments to consider, including single-family homes, multi-family units, commercial properties, and even real estate investment trusts, REITs. Each option has its unique advantages and can cater to different investment strategies and risk tolerances. If you're looking to get started in real estate, begin by educating yourself about the market and financing options. Networking with experienced investors can provide valuable insights and potential partnerships. Additionally, consider starting small, perhaps with a single-family rental, to gain experience before expanding your portfolio. With the right approach, real estate can be a powerful tool for achieving financial freedom and securing your future. Dividend stocks are shares in companies that return a portion of their profits to shareholders in the form of regular cash payments, known as dividends. These payments can provide a steady income stream, making dividend stocks an attractive option for investors seeking financial stability. Typically, companies that pay dividends are well established and financially sound, which adds an extra layer of security to your investment. One of the key strategies for maximizing the benefits of dividend stocks is to reinvest your dividends. By using the cash you receive to purchase more shares, you can take advantage of compound growth. Over time, this can significantly increase your investment's value and your future dividend payouts, creating a powerful cycle of wealth accumulation. Some reliable dividend stocks to consider include blue-chip companies like Johnson & Johnson, Procter & Gamble, and Coca-Cola. These companies have a long history of paying and increasing dividends, making them a solid choice for income-focused investors. By incorporating dividend stocks into your investment portfolio, you can create a sustainable income source while also benefiting from potential capital appreciation, paving the way for long-term financial success. Peer-to-peer lending, peer-to-peer, P2P, lending is a modern investment approach that connects borrowers directly with individual lenders through online platforms. In this process, borrowers apply for loans, and lenders can choose to fund these loans in part or in full. This eliminates traditional financial institutions, allowing lenders to earn higher returns compared to conventional savings accounts or bonds. The interest rates on these loans can be quite attractive, often ranging from 5% to 12% or more, depending on the borrower's creditworthiness. While the potential for high returns is appealing, it's essential to understand the risks involved. Borrowers may default on their loans, which can lead to losses for lenders. To mitigate this risk, it's wise to diversify your investments across multiple loans and borrowers. This way, if one borrower defaults, the impact on your overall portfolio is minimized. Several popular platforms facilitate peer-to-peer lending, including Lending Club, Prosper, and Upstart. These platforms provide tools to assess borrower risk and help you make informed lending decisions. By exploring P2P lending, you can tap into an alternative investment avenue that not only offers the potential for high returns but also allows you to support individuals and small businesses in need of financial assistance. Index funds. Index funds are a type of mutual fund or exchange-traded fund, ETF, designed to replicate the performance of a specific market index, such as the S&P 500 or the Dow Jones Industrial Average. By investing in an index fund, you gain exposure to a broad range of stocks within that index, allowing for instant diversification. One of the primary advantages of index funds is their low expense ratios compared to actively managed funds, which can eat into your returns over time. The concept of passive investing is central to index funds. Instead of trying to outperform the market through frequent trading and stock picking, passive investing focuses on long-term growth by holding a diversified portfolio that mirrors the market. This strategy typically results in lower transaction costs and less stress for investors, as it requires minimal management. Some popular index funds include the Vanguard 500 Index Fund, Fidelity 500 Index Fund, and Schwab S&P 500 Index Fund. These funds have consistently delivered solid returns over the long term, making them an excellent choice for investors looking to build wealth steadily. By incorporating index funds into your investment strategy, you can take advantage of market growth. Digital products are intangible goods that can be created, sold, and delivered online. They include items such as e-books, online courses, software, stock photos, and digital art. The potential for generating income through digital products is immense, as they often require a one-time investment of time and resources to create, but can be sold repeatedly without the need for physical inventory or shipping. There are countless ideas for digital products you can create. If you have expertise in a particular field, consider developing an online course or writing an e-book. If you're a creative individual, you might explore selling digital art, graphic designs, or photography. Additionally, software applications and mobile apps are in high demand, especially if they solve specific problems for users. To successfully market and sell your digital products, start by identifying your target audience and understanding their needs. Utilize social media platforms, email marketing, and content marketing to reach potential customers. Creating a professional website or using established marketplaces like Etsy or Udemy can also help you showcase your products effectively. By leveraging the power of digital products, you can create a sustainable income stream while sharing your knowledge and creativity with the world. Cryptocurrency investments. Cryptocurrencies are digital or virtual currencies that use cryptography for security and operate on a technology called blockchain. Blockchain is a decentralized ledger that records all transactions across a network of computers, ensuring transparency and security. Bitcoin, Ethereum, and Litecoin are some of the most well-known cryptocurrencies, but there are thousands of others, each with unique features and use cases. As an emerging asset class, cryptocurrencies have gained significant attention for their potential to deliver high returns. However, investing in cryptocurrencies comes with inherent risks and volatility. Prices can fluctuate dramatically within short periods, influenced by market sentiment, regulatory news, and technological developments. This volatility can lead to substantial gains, but it can also result in significant losses, making it crucial for investors to approach this market with caution. To invest in cryptocurrencies safely, start by conducting thorough research on the coins you're interested in. Diversifying your portfolio can help mitigate risks, as can setting a budget that you're willing to invest without jeopardizing your financial stability. Additionally, consider using reputable exchanges and secure wallets to protect your assets. By understanding the landscape and investing wisely, you can explore the potential of cryptocurrencies while managing the associated risks. In today's video, we explored 8 powerful assets that can pave the way to financial independence. We discussed real estate investments, dividend stocks, peer-to-peer lending, index funds, and digital products, among others. Each of these assets offers unique benefits and opportunities for generating income and building wealth over time. One key takeaway is the importance of diversifying your investments. By spreading your money across different asset classes, you can reduce risk and increase your chances of achieving long-term financial success. Remember, the more informed and strategic you are with your investments, the better positioned you'll be to reach your financial goals.